Hey traders, welcome back to the weekly Forex Forecast. Yesterday we had non-farm payrolls data out, and both non-farm payrolls headline data and the unemployment rate came out hotter than expected. And although we actually closed the week down in the dollar, we have previously broken the major high of the 104.98, and this is setting up for a major breakout to the upside. Now, what would be the fundamental driver to push the dollar to the upside to break, first of all, the 104.98? So we've got this kind of third wave kicking in here. And then we break the 107.35. We actually get a second third wave kicking in. You get this kind of cascade. That's how you get these big reversals. So this is still on the cards. And with the non-farm payrolls data, yes, we saw a slightly lackluster response from the dollar, but bond yields in the US are now attempting to break out to the upside. And although the dollar didn't hold on to its gains, yields in the US did. And this is suggestive that the markets are now concerned about a re-acceleration of inflation, a new inflationary regime similar to the 2021 into 2022 kind of rally we had in the dollar. And we also saw equities rally at the same time. Rates had to go higher, and that's what caused the initial sell-off in the stock market, and then the US dollar sold off over here once we got that peak in CPI. So it does look like we're going to get a similar, although not exact, setup as it currently stands. As long as it's not derailed by anything in the Middle East, it looks like we are set to get re-acceleration of inflation, bond yields higher, and this is probably going to see the Federal Reserve having to do more, or at least pushing cuts to the federal funds rate back more than expected. I wouldn't be surprised if we do get a continuation of this to see the Federal Reserve actually having to maybe even hike again, which not many people are looking at the moment. So going into next week, I do favor dollar long plays to the upside, and I also favor some of those commodity currencies that we're going to be looking at again, such as the Australian dollar, which is currently benefiting from that move up in gold. Okay, so moving on to the portfolio selection part, looking at the Australian dollar as the number one theme heading into next week. Why? It is first and foremost at the top of the performance metrics, and also as a commodity currency, it's set to benefit from a re-acceleration of inflation or an inflationary regime, which not just the recent data, so hotter than expected CPI prints, tighter than expected labor markets, not just the recent data pointing to, but also, as I just showed you, yields in the US pointing towards a potential re-acceleration of inflation. So Australian long plays are once again going into this week something that I am primarily interested in, only looking to be a buyer of the Australian dollar. I cannot sell it next week because of this. And the second long idea is the US dollar. Now, of course, the US dollar also benefits from an inflationary regime. Why? Because rates go higher, as we've just seen bond yields get repriced higher, and that drags the US dollar higher. This is exactly why the dollar rallied in 2021 into 2022. And in fact, it only peaked when CPI peaked in September of 2022. So the Australian dollar, which is the most risk-on currency in the majors here, and the US dollar, which is one of, aside from the Japanese yen, one of the most risk-off currencies. What does it mean when you see the Aussie dollar and the US dollar set to outperform? It means you're heading into an inflationary regime. And that's what the Forex markets are telling us, not just the bond markets. So going into next week, the two long themes that I like the best are Australian dollar longs, US dollar longs, paired with New Zealand dollar shorts. Now, New Zealand dollar is commodity currency. However, it is actually suggesting here in the performance metric we should be continuing to be looking at shorts or do nothing in New Zealand dollar. And what do I want to pair also the Aussie and the US dollar with primarily? Well, in inflationary regimes, as you see commodity currencies rising, or you tend to, say, the Australian dollar, which again is being dragged higher by gold as well, and the gold rally doesn't look to be slowing down, but the commodity currencies outperform alongside the dollar, and it's the EU majors that suffer. So I do want to be primarily looking at being short euros next week versus the Aussie versus the US dollar. And that also leaves room for a couple more. So here's the problem. I once again do not want to be short the Japanese yen. It has bottomed in the performance metrics. Previously, I've discussed how this acts often as a leading indicator here, because we've seen in the last bottom of the Japanese yen, we saw it bottoming first in the performance metrics, and then you get the bottom in the yen. So that's the first warning. The second warning is that the Bank of Japan, the Ministry of Finance in Japan, are threatening to intervene because of the weakness of the yen. So is it a good short? Not at the moment. based on those two things. So I'd rather leave Japanese yen again going into next week, because I don't want to buy it because it's still actually one of the biggest underperformers, but at the same time, I don't want to sell it because it's underperformed so much that it's at risk of intervention now. So if that takes the JPY off the table, it leaves New Zealand shorts to the downside. The other markets we have here then we could be looking at short are the euro. And also what we're going to be looking at is the pound. So pairing the Australian dollar and the US dollar, two assets that should outperform an inflationary regime in the Forex universe, with the euro, so an EU major to the downside, and the pound, this is going to provide us with the best opportunities heading into next week. So I am looking for EurAusd to the downside, euro dollar to the downside, pound Aussie to the downside, pound dollar to the downside, Aussie New Zealand to the upside once again, and New Zealand dollar to the downside. Now, that leaves us with two long themes heading into next week in the Aussie and the US dollar, and it leaves us with three short themes in terms of the New Zealand dollar, the euro, and the pound. So to add one more in, we can also look at the Canadian dollar to the long side, especially as we are biased to the upside in crude oil, and the rally in crude oil is supportive somewhat of the Canadian dollar. So although my primary longs are Aussie dollar, US dollar next week versus the New Zealand dollar, the euro, and the pound, we're also going to look at potential Canadian dollar longs if we get a bullish response from the Canadian dollar on the interest rate decision next week. Because next week we have a number of events coming out. We have the interest rate decision out of Canada, we've got an interest rate decision out of New Zealand, and we've also got an interest rate decision out of the ECB, as well as CPI coming out. And a lot of this is going to take place on Wednesday of next week. And it's likely we're going to see the markets really starting to move from Wednesday onwards. Okay, so let's have a look at the markets this week, starting as we always do with crude oil. And you can see on the crude oil chart, we're on a weekly chart here. I've just zoomed out so we can have a look at the overall picture. We've got the rally and we've started to bottom. And now it looks like at the very least, we are coming up to test the 96 roughly handle on crude oil, and this move up, could very well happen in the next few weeks. You can also see the blue levels here on the weekly chart. When I zoom out to the weekly chart, they are actually the projections for the weekly range here, so to the upside and to the downside, with roughly a 70% probability priced by markets. So I do think we're going to see more upside in crude oil. What does this mean? This is also inflationary. Again, it feeds into what we're seeing in the Forex markets with the commodity currencies and the US dollar setting to outperform. So lots of the data is pointing towards reacceleration, inflation, or that kind of 2021, 2022 kind of rally in the dollar, rally in yields, rally in the stock market as we got inflation picking up. Now, I'm not saying it's going to be as strong as that, or it's going to be as high in terms of the absolute level of inflation, up to 9-10%. But what I am saying is it looks like we're at least going to get a bounce or an additional wave of inflation coming back in as it currently stands. So if we zoom into the 4-hour chart, you can see this is trending very nicely to the upside. We may be at just kind of cyclical high here in the 4 hours. However, here is the previous breakout, and I would not be surprised to see this pulling back. I would really like to see this pull back and, if possible, retest the prior high at the 83.54 roughly, and also breach the lower bound. So what I'm going to be looking for next week is any kind of consolidation, correction, or kind of bull flag pattern. I'm going to be looking for potentially that breakout intra-week, and then you can look for a pullback and a follow through into the 90.62. This would be a good profit taking opportunity if you're trading intra-week. You may want to, add to a longer term position, hold on to it for longer. But if we continue back and we don't break out, so we pull back and we continue breaking down towards the 83.54, if we breach the 83.54 and also the 83.29, we essentially become oversold on the week, or oversold intra-week. So this would be also an opportunity below here. I'd be looking for 1 or 2 days up. If you breach the lower bound, it's very unlikely you're going to come all the way up to the upper bound. It does happen occasionally, but most of the time, you might bounce back to sort of halfway for 1 or 2 days. So I would be looking to capture 1 or 2 days up in crude oil if we can break the 83.29. Alternatively, you can look for that intra-week breakout and follow through into the 90.62 as well. But crude oil is a buy or do nothing for me. Shorting is not an option, and it is underpinning the kind of reacceleration inflation theme that we're seeing throughout markets. Okay, so the first Forex market we're going to look at is Aussie New Zealand. This was actually a long idea from last week's video as well, and we did have a solid up week in this. Any pullback in this market, and Aussie New Zealand dollar actually does run quite hard. You can see very often you get these kind of sideways consolidations rather than deep kind of flagging patterns. However, what I need to see to get involved next week is a pullback in this market. I don't like to buy this at the high when it's kind of trending on the 4 hours. I want to see this pulling back, and that will be the opportunity to look for a bullish breakout in this asset. And I'm going to be looking for a pullback into the 1.10048. And alternatively, if we can come down, so we start to trend downwards, and instead of breaking out, we pull all the way back. You can see what I like here is there's a 4 hour low and there's a 4 hour low, and the 1.0875 sits right in the middle. So if we breach this, I'd really like to see it take out this low as well. And right there, we become oversold on the week, and we trade into a support level, and I'd be looking for 1 or 2 days up. What I tend to do as well is usually if I get involved here, for example, if I buy this and it doesn't work, usually it sells off like this. And then if it pulls back, I usually exit or I pull back like that. But that's the opportunity I'm looking for. You can either buy on a breakout or on a pullback. Really, those are the two options if you want to buy or sell an asset. Next is EurAusd. Now we're looking at all of these on the 4 hour chart to begin with, really, but the work has been done on the higher time frames. And EurAusd, as you can see, is trending down, trending down, trending down, and at the same time, we're actually breaking out of this inverse head and shoulders. You can see there's a shoulder, there's a left shoulder, and there's a head. And sometimes I get comments about, maybe this is the left shoulder, or this is the left shoulder, or this is the right shoulder. All of that is really irrelevant. The fact is, we've got a high, we've got a higher high, then we have lower highs over here. You don't have to accurately pick left or right shoulders. You just want to see highs, a higher high, and then a failure to make a new high. And this is where we're starting to break out, because this is where stop losses should get liquidated. You can see it came down, people stepped in to buy again. And what's going to happen is if this continues up and then takes this level out again, you're probably going to see all the breakout traders stepping in as well. So I do really like this to the downside. And coming into this week, what I'd like to see is I'd like to see this first and foremost correcting to consolidate and pull back. And that's going to provide the opportunity for one of two things. I would like to be in and out of this by Thursday. So if we can get a pullback and a breakout intra-week, you can look for that kind of follow through, pullback, and then follow through into. There's a nice low over here for a profit-taking opportunity at the 1.6348. Alternatively, if we pull all the way back and we test the upper bound at the 1.6593, this is going to be an opportunity, especially if we push through this and test this high, this is going to be an opportunity to fade this as we become overbought on the week in a kind of weaker asset. That's the opportunity to fade this for 1 or 2 days to the downside. Next is Pound Aussie. Now, sticking to that theme of inflationary setups in the Forex markets where we get the EU majors underperforming the commodity currencies, look at Pound Aussie. This actually looks like it could be setting up for a pretty significant breakdown. And again, that would be indicative of this kind of higher than expected inflationary regime kicking in. And you can see this where we have this high over here, we've got this failure to make a high over here, and we break the low over here and see how we bounce, very much like what we just looked at. We tested that kind of breakout level and we bounced. And I said to you, if we take out that low again, very often you see breakout traders coming in, and that's exactly what started to happen. We're seeing momentum now to the downside. This on the daily chart, let's go and have a quick look on the 4 hour chart. And there's your head and shoulders breakout, which failed at first, attempted to rally from it. And then we start to get the momentum. Look at the sellers coming in once you start to break down here. Look at this candle. These 3 candles here shows you stop losses have been taken out. Unlike here, we test it and we kind of chop. This is momentum when it kind of slices through there. You know longs have been liquidated. So coming into this week, any continued pullback in this market, I am going to be looking for a follow through to the downside. And I'm going to be looking down to intra-week, the 1.9061. And of course, if we pull all the way back and retest the 1.93609, this is going to be the second place next week on a kind of fading this opportunity that I'm going to look for 1 or 2 days down in Pound Aussie. Moving on to the dollar pairs, looking at New Zealand dollar, this is my favorite short out of all of the dollar pairs. You can see on the daily chart here, we've broken down and we've pulled back and retested the 0.60394. So this is perfectly set up to start to sell off, and you can see this is now starting to trend once again to the downside. We may break through here. We do have news next week, and it may be the case that we test the upper bound, and that would be the opportunity to look for a sell-off. You can hold on to some of these setups if you like to trade longer term, but of course I'm looking primarily here just at kind of 1 or 2 day short-term setups. So coming into next week, the difficulty is we do have CPI and a New Zealand interest rate coming out next week, and it is going to make this a volatile market. I suspect we're not going to see very much leading up to Wednesday. What I'd like to see is on Wednesday, once we have CPI and the New Zealand interest rate decision, if we're up in this area and we breach the high, especially if we test this high, this is going to be a place that I'm going to be looking for a potential reversal. And especially if you've got, CPI or a news event, if you start to blast through the upper bound here, you do really want to give it some time and see if it starts to fade and run out of momentum, because otherwise you can jump in and you can just fade, a very strong market to the upside. So you want to be careful if you are fading news events. As a rule of thumb, if you do try and fade the event, look for that key area resistance first and then look for it to kind of stall out before it rolls over. Don't jump in if it's just a rocket ship to the upside. The next thing I'll be looking for then is potentially a breakout intraweek. So we come up, we're testing the high, maybe we consolidate, and then what we get is, we could end up with a nothing event from the Reserve Bank of New Zealand. So nothing interest rate decision, and then we get CPI coming out maybe hotter than expected. We get the sell-off like this. That would be the opportunity to look for a pullback intraweek down to the prior low and onto the 0.5943. Again, this may be a tricky one, so I would probably wait until after both the interest rate decision out in New Zealand and US CPI come out on Wednesday before you get involved. Next is EurDollar. Now we cover EurDollar every week, but I do think this is a good short, and I'm on the daily chart here to show you really the opposite of what we looked at in the dollar index earlier, because the euro makes up 57% of the dollar index. So just as the dollar is set for a major breakout to the upside, so too is EurDollar set for a major breakdown. Now, if you think about everything we've said, whereby the markets are pointing towards this kind of reacceleration inflation or an inflationary regime, it does mean that we could see, once again, just like last time, US CPI coming out hotter than expected on Wednesday. Now, I'm not saying it definitely will. These kind of events are very, very difficult to predict, and we see all kind of swings in them as well. But there's definitely a risk that we see hotter than expected CPI, just like we did last time, once again on Wednesday. And if that's the case, not only is it going to be confirming of what we're looking at in the markets, which tend to lead, the data is coincident. And if we see that, that is going to be an obvious catalyst to break this to the downside finally, because we've kind of been chopping around here. But you can see we have exactly the same kind of setup where we've got our failure to make a high over here. Here's the major breakout level, and we have a second within the right shoulder, a kind of head and shoulders as well. So any kind of bullish catalyst from CPI, once we break down here, and the market is priced to kind of stay in this range. We might come down, test it next week, and then kind of finish the week like this, and then next week follow through. But either way, I'm definitely only interested in shorts, and I'm just highlighting the potential for a major breakdown in the euro. First below this low, and then below this low if we can get it as well. So coming into this week on the 4-hour chart now, on the intraday chart, I would be looking for a continuation and a pullback, and I'm going to be looking at a breakout intra-week. Now this might be a difficult one next week as well, because we have CPI on Wednesday and then the ECB. I'm thinking we're probably going to see a move off of CPI, and it may be to the downside. And the ECB, they're coming out kind of dovish now, and they're talking about a June rate cut anyway. So I find it difficult to see what the ECB are going to do on the hawkish side when they've really already kind of more or less stated that, we're kind of looking at June rate hikes out of the ECB. So my guess is that the ECB event will probably be non-eventful, and the risk is on the Wednesday CPI. So certainly if we start to pull back and we break out on Wednesday, this is the opportunity to look for a pullback and a follow through down to the major breakout level to the downside, which I highlighted to you as, maybe we breach the 1.0750 and we just kind of bounce and hang around here, and probably in the following weeks we'll get the bigger sell-off. But certainly intra-week down to this low over here and the 1.0750, that would be a follow-through trade I'd be looking at to the downside. And also if we pull back, we breach the 1.09230 and we take out this high, that would be great. We run into resistance. This would be the second place I'd be looking for a near-term fading opportunity next week. But again, you've got to be careful fading news events. So EurDollar and New Zealand dollar are going to be more volatile than the other assets this week. Next up is pound dollar. Now, pound dollar only has a CPI on Wednesday coming out really because it doesn't have the interest rate decision like New Zealand or like the EU does. So going into next week, this out of the three of them, although New Zealand dollar is my favorite short, this is probably going to be the least volatile one and the least choppy one. And you can see in pound dollar, we also have a major reversal pattern, but this time it's a double top instead of a head and shoulders. And the breakout level is this low over here. So any opportunity to get involved before this major breakout would, give the opportunity for anybody short to kind of move stop losses to break even. If there's some volatility around this breakout here, like we saw before, you get the bounce and then you kind of pull back and then follow through. It gives you an opportunity to get short into the breakout and then kind of take the risk off the table. So another market which is setting up for a potential major reversal versus the dollar. Looking on the 4-hour intraday chart then, what I'd like to see is I can either be short or do nothing. I can't buy this market. And this market is unlikely to do anything into Wednesday CPI. If we get a hotter than expected report, I'd be looking for this to sell off, pull back, and then start to follow through to the downside. And again, once we break this low, we could really start to accelerate. Now, are we going to do it next week? Maybe not, because the lower bound is right here and this tends to cap it even on a major breakout. But I would not be surprised to see it breaking like this, kind of holding, and then next week or the following week start to sell off as well as the dollar really breaks out. So the second place after here, this kind of breakout and follow through that I'll be looking at next week, is any kind of pullback and breach of the 1.2739. We essentially have roughly a 70% chance of pausing or reversing to the downside. It is slightly less if you get a hot, or in this case would be a cold CPI print. CPI comes in softer than expected and the dollar sells off. You could see this break, quite strongly and take out this high first. So anytime, as I said, you're fading a news event, you have to, if it does break higher on CPI, wait to see if it kind of runs out of steam and then start stepping, maybe even the following day, as opposed to jumping in straight away. So those are the two opportunities I'm looking for: a pullback and a fade above the 1.27396, or a breakout and a pullback into the 1.25360 in this low over here. Okay, so let's have a look at a couple of the CAD pairs then before moving on to gold and silver. Starting with Aussie CAD. Now we have the Bank of Canada interest rate decision on Wednesday. And what I'd like to do is look at one of the best long plays, or let's say in this case, short the Canadian dollar if we get a negative outcome from the BOC on Wednesday. And then alternatively, we'll look at a Canadian dollar setup, which will be good if we get a bullish response from the Canadian dollar or we get a hawkish Bank of Canada on Wednesday. So starting with Aussie CAD, Aussie is the number one long idea. So going into next week, what I'll be looking for is a pullback into Wednesday. And if you get the Bank of Canada coming out and you get a weakening of the Canadian dollar, you can look for the breakout to the upside in Aussie CAD and look for the follow through in the stronger or the better performing currency to the upside in Aussie CAD. You can also, if it's a non-event and this asset pulls back, you can also look at a potential buy the dip opportunity below the 0.88687 for 1 or 2 days up as well. But primarily looking for that breakout and pullback for a follow through if we get a negative reaction from the Canadian dollar on Wednesday. And finally, before we move on to gold and silver, the pair that I would look at the most if we get a bullish response from the Canadian dollar or a hawkish Bank of Canada on Wednesday is pound CAD. And this, of course, would be pound CAD to the downside. Now, the other thing is you could potentially look, if you get a bullish or a hawkish Bank of Canada and you see the Canadian dollar rallying, you could also look at EurCAD to the downside and New Zealand CAD to the downside. The problem is both the euro and the New Zealand dollar have interest rate decisions next week. So I've chosen the pound versus the CAD to the downside so you can avoid the additional event risk because the UK doesn't have an interest rate decision. So coming into next week with the Bank of Canada on Wednesday, any continued pullback, I would be looking for a potential breakdown like this. If we get a bullish response from the Canadian dollar, and you can look for the pullback and then a sell-off into the low. In fact, I would imagine we would come down below the 1.7058 and probably test this prior low over here. Now, alternatively, if it's a non-event, you can still look for a pullback. If we don't get any kind of response, as sometimes happens, it comes out as expected. Maybe the Bank of Canada don't say much. Any continued pullback into this high would be viewed as an opportunity to look for 1 or 2 days reversal in pound CAD to the downside. Okay, so wrapping up the video with gold and silver, starting with gold. And gold is a market that I've been highlighting to the upside for a while now, and it is a very good long play going into next week. I still only want to be long gold. The only thing I would say about gold is we're starting to see greed come into gold on a daily and weekly time horizon, and very often, roughly 68-70% of the time, this will be followed by a pause or a correction. So I do think we're going to consolidate in gold, but we have very, very strong momentum, and momentum usually precedes price. So any kind of consolidation or peak in gold is probably going to be cyclical, in the sense that I don't think we're looking at a major top in gold here, but I do think we might need to pause or correct before we move higher in any significant way. However, going into this week, I can still only buy gold or do nothing. Selling this market is not an option for me. So any pullback in this market, I am going to be looking for a potential breakout intra-week, as you know, we may chug along for another week or two or day or two. And I'm going to be looking for a breakout into the 2381.07. And if we pull all the way back and we retest these lows, and there's a high over here and a low here, so there's a nice kind of support and resistance area right here. If we breach the 2278.58 and we start to trade into this level here, roughly the 2270, this is where I'd be looking for it to run out of steam, to lack momentum, and very often intraday, you know, you see it kind of doing something like this, and that would be an opportunity to look for a 1 or 2 day reversal to the upside in gold. And wrapping up the video with silver, you can see on the daily chart here, this is actually a pretty significant breakout, and we got a breakout with momentum. Again, just as I showed you earlier, those long positions being liquidated below the low, you can see short positions have been liquidated here, and momentum precedes price. Again, we are probably getting to a point where we need to pause or correct, but it looks to be cyclical, and I would only want to be long silver going into this week. I wouldn't even want to have this kind of as a plan B, you know, on dollar weakness. I think only gold and silver now, especially with these breakouts, we should only be looking to the long side in these. So I can buy this or do nothing. Selling this market for me next week is not an option. I just sit it out if the setup isn't there. So coming into this week, what I'd like to see is we may pause or correct, consolidate, you know, no market moves in a straight line. Any pullback would be viewed as an opportunity to look for a breakout like this, pullback, and a follow through into the 28.64. And alternatively, if we continue to pull back, there's a really nice low right by the 26.32. There's also a high here. So in this area here, I'd be looking for this to breach, start to run out of steam, and then I'd be looking for a 1 or 2 day reversal to the upside in silver. Again, this is a pretty significant breakout, and as it currently stands, I would not want to be short this market. So that is it from me for today, guys. As always, I hope you enjoyed today's video, and if you did, why not consider joining us in the GMT training room each day, where I look at the best markets as well as sharing real-time setups that I'm personally looking at trading with members as part of our GMT training program. Don't forget, you can also get a 2-week free trial to the cutting-edge Hedge-trading app used in today's video by heading over to www.hedge-.com.